Welcome back to the Mike Rosehart Show. We're live again for another week of live Q&A. I'm back in Canada this week. Made it back to Canada. We're here at my house. I've missed my house. I've missed my own bed. It's been almost 3 months that we traveled around Florida, went to the Bahamas, if you guys are following along. I've been exploring and trying to figure out where the Roseharts are moving their home base, their tax base, where we're going to be living. And it won't be in Canada. The tax climate in Canada for me is not conducive. Will I still invest in Canada? Potentially. Florida is also an interesting place to invest, and we got a few offers out on a few properties, and we'll see what comes to fruition. If you guys have any questions, by the way, shoot them down below. Anyone who's been watching, though, the markets today, stocks for a sec, huge rebound. China showing a ton of support and helping rebound the economy. My favorite Chinese growth stock, Alibaba, popped up 34% today, which is a huge rally for that stock. It's been beat up, like 65% in the last year or something. So huge amount of a rally there. Real estate, of course, at insane highs. Miami's up 39% year to date on their rents. So that's going to translate. It already has translated for the most part into the housing prices, but it will continue to in the Miami area and within Florida translate to further real estate price growth. I could see the rising interest rates having a negative effect on real estate, but I'm still overall neutral / bullish. On Canadian real estate in certain cities, I'm less bullish. Some of the stuff isn't making a lot of sense in like Toronto and Vancouver, but I mean, it didn't make sense 3 years ago either, and it's continued to appreciate since then. So anything can happen, right, in this world. So hopefully my chat's on. If my chat is on, someone send me a comment down below and let me know that my chat is operational. I'm just gonna have a bite of tea here for a quick sec. Just give me a sec to have some tasty homemade pasta. It's got all the goods in it. I'm thankful that we don't have a lot of questions right now because I'm starving. I almost forgot it was Wednesday. We came back late last night. We drove through from Florida. We stopped over one night near Knoxville, Tennessee. Had 2 hours of traffic almost in Atlanta. That was brutal. And then when we were driving back near Detroit, we had a really bad 1 hour stop because of an accident. So that was brutal. Made it right over the border. Back into good old Canada. But it's really nice being back. I gotta say, I miss seeing some friends and some family and some people that I hadn't seen in a few months. So it's nice to come back. My life plan always involves Canada. In the summer, Canada is, and I haven't been all around the world, but I've been to Brazil, I've been to Africa, all over the US, all over Canada. And Lake Huron in Ontario, some of the most beautiful water and beaches, second maybe only to the Bahamas. But in the summer, just a beautiful place to be. And I could see myself spending summers here for the rest of my life as a vacationer instead of a tax resident living here. But Canada's just a beautiful place. And so I'm glad to be home. It's also it isn't even just about Canada. It's also just having my own, having my own house, my own bed, even though my house is literally a renovation war zone. Our entire house is torn apart. And this is my office, which is normally cleared out and super great. The contractors, while I was gone, we're redoing all our floors in our house, shoved everything into this room. So I had to jump over things to get into my office. Luckily, they didn't touch my desk. My desk is largely untouched. It's a big L-shaped desk. So I can still bring you guys the stream, but just brutal. Coming back to dust everywhere on our beds, and a lot of the renovations not finished, and worst of all, deficiencies. And you come back and something isn't done properly, it's the worst feeling. So here we are. Good to see you again, Grateful Forever. Longhorn, good to see you. Andrew says, what are your thoughts on East Coast and Calgary properties? You know, I feel like Calgary now is going to experience a boom related to the increased demand for oil. So I think that short term, there should be a lot of pressure upwards for Calgary, but Calgary's been underpriced for since 2020 when oil fell futures fell negative and like there was just death in Calgary, economically speaking, because majority of the workers there were were working in the oil and related industries or had a trickle down economic effect related to oil. So Calgary was hit pretty hard. There were some spots in Alberta that really made sense financially, and you could find houses that had great cap rates in comparison to Toronto or Vancouver or even London or Ottawa. There were some really good opportunities. So I've liked out east specifically and out west, specifically Alberta, for some time now, but I just don't have the power teams there. I don't have the interest to pursue it. I'm not hungry enough for the money that I want to go be traveling out there all the time to build power teams, be managing all of that. Alberta's a much more friendly landlording environment. The tenants have a lot less rights than they have in, say, Ontario. Ontario is one of the worst. They're like second only to California, I would say. They're some of the worst places in the world to landlord. Florida's great. In Florida, you have a month-to-month tenant that's paying $1,000 a month. You say, hey, your rent's $3,000 a month in 60 days, or get the fuck out. And they have to GTFO. They have no rights. It's like they can negotiate with you, and if you agree, yeah, I'll increase your rent $1,000 this month. This month, month over month, I can just jump at $1,000. That's amazing. As a landlord, when your hydro costs are increasing and inflation's at all-time highs, mortgage rates are increasing, so your mortgage is therefore going to increase. Your property taxes are at all-time highs, especially in Ontario. They're going to start phasing in. They just started talking about this. The impact values in Ontario are based on appreciation from 5 years ago, and they step it up at inflation. So most of the property taxes in Ontario are based on 5-year ago valuations. Today, they're up 125%. So almost every impact valuation right now in Ontario is at least half of what it should be. When they step it up and they double it to, hey, your house that says impact, it says it's worth 400, is worth $1 million. So guess what? Your property taxes are going up 100%. So instead of $6,000 a year, we're going to charge you $12,000 a year. When that starts hitting landlords, in Ontario, you can't raise rents. So you're stuck. You got nothing you can do unless you run an Airbnb. Ontario is a terrible environment to landlord in. I would only ever own a property to Airbnb in Ontario. I have no interest in long-term holds in Ontario. Having been to the Landlord Tenant Board before now and gone through all of that experience and talked to some of the people who work as paralegals and lawyers and in the space, I've learned that Ontario is not a landlord-friendly province. They're Airbnb-friendly to an extent. If you have a guest stay longer than 30 days, they're not an Airbnb guest, they're a tenant, and they have tenant rights, so you can't even evict them. Interesting fact. So Airbnb doesn't really protect you either unless you're doing short duration type stays. But for the most part, people doing Airbnb are not there for the long term. So if you're going to do real estate in Ontario, you should definitely do Airbnb. Even if you're getting the exact same amount of rent, which you won't, you'll get more because you're offering a furnished place. Even for a long-term year or two Airbnb booking, net of all the fees, you will still end up further ahead. But even if you didn't, even if you ended up the same as regular landlording, at least you can bill their credit card for damages. You have a credit card on file. Here in Ontario, you can't even take a damage deposit from a tenant. There's nothing, you're not allowed. You can't even use the last month's rent for damage deposit in Ontario. It's illegal. So there's no recourse except through Airbnb. So again, I would just, if you're gonna have tenants in Ontario, they should be through Airbnb. I stand by that. Anyway, yeah, I lost my train of thought there. Andrew says, what are your thoughts on East Coast and Calgary properties? I answered that question. So the next one will you be selling your current house eventually? Probably. It's likely. If I leave Canada, yes, probably. If I don't, I'll move it into my corp and try to run it more under my corp. My goal right now is, and that could change, I'm up to, if new political influences come into power in Canada and Canada ramps back on its plans from a tax perspective, like they have some new plans coming down the pipeline very soon where they're going to increase the capital gains inclusion rate from 50% to 75%, as one of the many changes that they're implementing to pay for this massive debt that they've created. Yeah, I don't think it's gonna, but if it did change, maybe I would consider staying. But as it is right now, I'm interested in leaving. And if I leave, I would need to sell my primary residence, for sure. I do not want the CRA to think that I am at all residing in Canada. So I will sell everything that I own, all my possessions. I will full stop, leave Canada, cut all ties, and move. It will most likely be the Bahamas, is where I will go. I will spend some time in Florida, probably still do some business in Florida. I may still do business in Canada, but it will not be my primary business, and it will be a very little amount of my investing activities, so that it's clear that I'm only vacationing in Canada, because I don't want Canada to go after my worldwide income. I will not be living in Canada. That means I have to stay out of Canada. I cannot be in Canada more than 182 days, so under 180 days ideally, to not even be close to having them say, hey, you're actually residing here over 183 days a year. So you got to stay less than 6 months in Canada as another piece. Yeah, I mean, it's kind of the same in the US too. US taxes worldwide income, it's even worse. At least in Canada, I can leave, become a tax resident in the Bahamas, and keep my Canadian passport. Continue to come back to Canada if I want to, travel around the world with a Canadian passport, and not pay tax in Canada. You do lose your health benefits, but I mean, I pay 100 grand a year for more than 100 grand a year in taxes for my health benefits that I don't really use. I could buy the best medical care in the world by investing the tax savings. I could literally afford any healthcare coverage plan and still have surplus, right? So it just doesn't make sense for someone in my situation. I know there's a lot of people watching here who make 50 grand a year. And if you don't make very much, Canada's a great place to be. They have great social safety nets. You could be a bum and play World of Warcraft all day and collect $1,400 a month. There's even government housing. The tax rates are zero as a couple if you bring in $100,000 a year in dividend income. So you can retire in Canada and pay no tax at all if you're what I would consider like middle class or lower middle class. So Canada's a great place if you're looking to mooch or leech and you're not a high achiever, high performer. But if you're a high performer and you're making great money, it's very expensive to live in Canada. Not only is Canada expensive, but the cost of the tax bill is, and I have friends who I've talked to who do make that kind of money. Like I have a buddy I have a few friends actually who are close to the seven figures mark annually. And I'm like, you pay, even with like the best optimized accountants and all the write-offs in the world, you still pay like 300 grand a year in tax. And they're like, yeah. And I'm like, and your lifestyle's like 150 grand a year, at least in Toronto. Like you're paying 450 grand a year to live in Canada. And they're like, that's fine. Family here, whatever. They don't even think about it. They're like, no, I don't mind paying the tax. I like Canada. It's a cost of living that I don't mind paying. So some people are like that. And I mean, that's not me. I'm not interested in I'm still value conscious, and Canada doesn't provide a lot of value for what you pay as you become a what I call societal carrier, someone who carries society. You employ a lot of people, you drive the economy. Anyone who's a high earner typically is in that slot. So you're carrying on your back all the people who are mooching. And that's fine, like to an extent, but I don't know, it's just not for me. I think I want to leave. And to be honest, it's not even just about the taxes. It's about in the winter, it's so depressing in Canada. There's so little sun. It's cold. The environment just gets, very restrictive. It's nice to get away to the Bahamas where the weather's nice, or Florida where the weather's nice. It's just beautiful. And it's a lifestyle design thing. And I'm like, you know what? I'm going to be gone 5-6 months a year for the winter anyway. If my goal was to spend 6 months abroad and 6 months in Canada, I might as well spend 7 months abroad and become a resident there. Like I'm not really a resident of Canada anymore if I don't spend the majority of my time in Canada anymore. So why stay in Canada? But yeah. Next question. Port City says, I'm running out of capital for my BRRRR. Should I refi even though I'm only 1/3 in the reno? Well, the question is, why did you take on a huge reno and only have 1/3 of the funding available? That was a bad idea at the start. Probably should have had a little bit more forethought and foresight going into that plan, but here you are. Is there a way you can tap into other reserves? Like could you use lines of credits or something else to carry the reno to completion? You could refinance and put a mortgage on it, but it's possible that the new mortgage, given the house is torn apart, is not going to give you any additional funds. It's also possible that it gives you a very small amount of funds, right? Because you're only able to borrow the difference from what your current mortgage on it is and what your new appraised value is times, say, 75 or 80% loan to value. So, I mean, you're potentially losing, I guess on the con side, you're losing a few $1,000s in legal fees to register a new mortgage and put it on. There'll be mortgage discharge fees from your existing mortgage when you put another mortgage on it. There'll be fees, legal fees from the lender as well, if it's a private mortgage. If it's a bank mortgage, they may cover most of those legal fees for you. There'll be an appraisal fee. In many cases, if you're going to refinance again in like, say, 3 to 6 months, it's actually cheaper to go to like the mob and borrow at 25% than it is to go to the bank and pay all the breakout fees and the lawyer fees and registering. A lot of people think that the refi game, they'll come out ahead, but just because you're chasing a 3% interest rate with all these fees associated, if you plan to refinance so soon, in many cases, it doesn't make sense. So run your numbers. It just depends on what your numbers look like. But in a lot of the situations, I find it doesn't make sense to refinance halfway through or a third of the way through a reno. But each situation is different. It could make sense for you. If the reno is going to take you a year or two, you could do a 1-year fixed mortgage and you won't have any breakout fees. So if you're careful about it, yeah, you could do it. AJR says, I'm planning to retire in 5 years. I have 20,000 saved up. Please tell me what I can strategically do to retire early in 5 years. So I'm potentially working on a mastermind course for that exactly. How to retire in 5 years. How to joint venture properly. And I can give you all the tips and tricks for the joint venture stuff. So that's coming soon. I'm partnering with someone on that. So the majority of the money isn't even going to go to me. I'm more just doing it to like help people and be sort of the expert in the room on that. So stay tuned for that stuff. It's coming. If you're interested in all the JV templates and all the tips and tricks and things and tools and templates that I've used, that's going to become available soon. But you have 20,000 saved up, so you've already got some capital to start. It's important that you don't lose that money and that you continue to save aggressively. If you want to retire in 5 years, you need to work the math backwards. So whatever it is that you spend, find a way to crank it down. Whatever it is that you earn, find a way to crank it up. And then in the next 5 years, the most important thing is that you're earning a lot more than you're spending. As an example, if you were to save 90% of your income and spend 10% of your income, that would require rent hacking and house hacking and probably biking to work and a number of other frugal sacrifices for 5 years, but very doable. I did it. I know lots of people who have done it, especially if you're rent hacking, which means like you rent a 5-bedroom house, you take the smallest room and you rent 4 bedrooms out, and those 4 bedrooms cover all of your rent. So your housing cost goes down to 0. House hacking is the same thing, but you buy the house and you do the same thing. You get the equity lift with the house hack. With the rent hack, you get no equity lift, no pay down, but you at least get to live for free. I've done both. They were both crucial strategies in the beginning of my journey to allow me to live for free and then bank all of my income. I was saving 100% of my income and 75% of my wife's very small income. She made half of what I made. So we were well over 90% savings rate, especially once I started getting rental properties, because I didn't spend that money either. I started investing all the growth from that cash flow back into more properties. And I continue to refinance those properties. And that snowball builds real quick when you're super frugal. When you're saving like 20% of what you make, it's very hard to build the snowball fast. But the math works out like this. This is a very conservative figure and assumes mostly a stock portfolio, but it assumes you withdraw 4% from your portfolio. So you need 25 years of living expenses set aside to retire safely. Now, if you have rental properties and you're actively managing those, like when you have a rental property, you have to actively manage paying the bills and there's stuff involved, at least managing a property manager. Maybe you place a tenant yourself and manage it yourself, in which case that's like a part-time job. It's effort, it's energy for a greater return. In those situations, your assets can produce a hell of a lot more than 6 or 7%, which gives you their 4% net after inflation to withdraw to live on. It can produce 15, 20, 25% of your money relatively easily, in which case you could withdraw like 8%, in which case you only need 10 or 12 years of living expenses set aside to retire. So it depends on your yield, on what your portfolio looks like, what your risk tolerance looks like. No one has a perfect answer, but the really, really conservative number is 25 years of living expenses set aside. Now, if you save 90% of your income in like under 3 years, if you can learn to live on 10% of what you make, right? Let's say you make 100 grand a year, and you can live on $10,000 a year, which is possible and doable, especially with rent hacking and house hacking and other side gigs. You can end up living for pretty much free. and keep your living costs super low. Now, if you can be comfortable in that environment, which I know lots of people who are comfortable living like students and they don't need a whole huge existence. They don't like work and that's their preference. They would prefer to have less stuff and more freedom and time to enjoy their life. So it's a choice. But maybe it involves living in your parents' basement, but you could do it totally without any family help. You could be an independent person and rent hack, get a 4-bedroom house and away you go, and sublet the rooms out and live in the smallest one. But some people rent whole houses, Airbnb the other half for the landlord. Then that covers, they pay a fixed rent for both units. They live in one of the units. They Airbnb the other unit out. They put in their effort to do that. And the extra cash flow they're getting from the other unit pays the fixed rent entirely that they owe to the landlord. So they're not making anything from the Airbnb unit that they take care of and manage, but they don't pay for their own living costs. So living for free is a great place to start. People spend 40 to 50% of their income on housing. So drop that to zero right away. That's another 40, 50% in your pocket every month. At the start of your journey, that's important. If you don't have anything, you have 20 grand saved up. So to me, that's not a lot of money. I know you might have been saving a long time for that, but I just choked on an onion. Oh, it was a piece of onion. I just inhaled it. Whew. Almost died live on camera. Oh, that's the worst. When you have a little piece of food and you're like, I just cleared my mouth out and inhaled by accident and inhaled that piece of food. It's still there, but I'm alive and breathing. Lost my train of thought. Savings. So if you could learn to live on, say, 15% or 10% of what you're making, you can save enough 25 years of living expenses at, say you're living on $10,000 a year, 25 years living expenses is 250 grand. So you can retire on $250,000 well deployed and invested well in passive income. To save $250,000, you're making 100 grand a year, you're living on 10, a 90% savings rate means you get there in like 2.5 years with a growth strategy where you're investing that capital. In under 2 years, you can get there. An 80% savings rate takes you 3-4 years. 75% savings rate, in usually under 5 years, you can do it. So if you want to retire in 5 years, you need to be like living on a quarter of your take-home income, which, there's lots of ways to get a rental property or something, get write-offs or start rent hacking, side hustles to get your income down. You can buy a car for say 2 grand that you then sell a year from now for 3 grand because you bought it under market value. And your car costs you negative $1,000, as in it pays you $1,000 to drive it. I've done a lot of those car hacks where transportation cost is nothing. I buy the car for a good price. I go on Kijiji, a Facebook Marketplace. I find a deal on a car. I drive it for like a year because I bought it with low kilometers. I sell it at a certain point. I make it nicer as I own it. I detail it, I clean it, and then I go and sell it in a year or two. I get to drive it for free for the year, and then I buy another car. And I always have a nicer, like I can always get a nice car. Sometimes people do it with $20,000 cars. I've seen people do it with Lambos. If you like a nice BMW or Mercedes, it's easy to do it with high-end cars too, especially because high-end people who have those nice vehicles, they don't want to put the effort in to detail their car. They just put it up, just get it off. We'll trade the dealer offered me 20 grand. If you give me 20, I'm happy. Boom. Now you can clean that car up and sell it for 28. So you get to drive it for the next 2 years for free. In fact, the profit you make will cover your insurance and your gas. So I know people who are car hacking, rent hacking, so their expenses are like nothing. That's the frugal side, right? And when you're just starting out, if you're saying, hey, I have 20 grand and I have a shitty income, I'm like, okay, we need to get you on the frugality bandwagon. If you come to me and you're like, hey, I have high income skills, Mike, I make 250 grand a year, we don't need to talk as much about frugality. Unless you're spending the whole 250 grand a year and you're not saving anything, like, holy fuck, you need to bring some frugality into your life. But, it just depends where you're at in your cycle. Like some people are entrepreneurs, they reach out to me like, Mike, frugality means it's not important. Or, hey, Mike, I've been doing this for 10 years and I have $1 million in equity in my house. I'm like, we need to be talking about putting the equity in your house to work. You have $1 million sitting in your house. If you refinance the capital out, it costs you 2%. You can go invest it at 10 to make an 8% spread on that $1 million. There's 80 grand a year. That's more than that 80 grand just from helping you reoptimize the capital sitting in your house. I've been able to do more for you than frugality ever could. Frugality might help you cut your expenses a bit. You might save 10, 20, 30,000, whatever, a year. That is helpful, and that lifestyle change will allow you to retire a lot sooner because you need a lot less. You've learned to spread the dollars a lot further. So you need, like, instead of 5 million to retire, you might only need like 2 million to retire because now you learned how to live on less. Like I was traveling all across, I've traveled all around the world, and I was traveling in Florida for the last few weeks, and I was staying in hotels mostly for $50, $60 a night that are regular $250 a night. So my burn rate was like $1,500 a month. to be in Miami, in Naples, in Sarasota, in Orlando by Disney, because I know how to value hunt. I love a deal. That's at my core. Like that's what got me into real estate. Is I love hunting for things under value. It's the same in frugality. It's not as important now. Like I don't mind spending a little more because my passive income is multiple six figures. So I literally can't even spend. I'm still frugal, but like I literally can't even spend the income coming in. So at my stage, if you're looking at my case study, you're saying, what's Mike doing? Or you're in a similar situation to me, you know, you don't need to be focused on the frugality. Spend less, earn more, maximize returns. It's flipped. It's maximize returns and find ways to earn more money. The frugality piece, though it's important, if you're if you're watching this and you have a great savings rate, you're saving more than half your income, more than 75% of your income, more than 90% of your income, especially more than 90% of your income, we need to not be talking about frugality. We need to be talking about strategies for you to earn more money. How do you develop those high income skills and build out those businesses and side hustles, et cetera, to grow your income? And then how do we maximize the returns on the capital you have? How do we redeploy your current portfolio so you can make more? That could involve, you know, adding some leverage to the mix with cash flowing assets like real estate. That could involve, you know, reoptimizing your business and pulling capital out. There's lots of ways to optimize and maximize returns while not increasing risk, because we don't want to increase risk. We want to chase return, but not at the cost of losing money. You don't want to lose money ever. You want to be focused on not losing money. Capital preservation, super important. Okay. Do you still have your Canadian bank account for TFSA and RRSP dividends? I still have Canadian bank accounts because I'm still Canadian currently. I still pay tax in Canada. I will pay tax this year in Canada on all my worldwide income because I still live in Canada. Technically, I haven't moved yet. I don't have any residency in Bahamas, and it's on my plan list, but I still have lots of assets here I have to dispose of. I still have 7 properties to dispose of still. My primary house alone has, you know, I've got to get it to the point where I'm ready to sell it. It's not landscaped at all. It's just not ready. I wouldn't put it up right now. It's shit everywhere. I'm like a year or two from making the jump. I'm starting it now. I've been planning it for years, but I'm starting to make the move now. I will start spending my winters abroad, as an example. I will be in the Bahamas and in Florida in the winters. By the end of next year, I'm hoping, I will file my exit return in Canada, but we'll see. I will still likely have a Canadian corp, which I invest in. My Bahamas corp and my personal Bahamas tax residency will own that corp. My Bahamas corp will probably consult for different various Canadian organizations, and I can do that tax-free because in the Bahamas, the offshore banking system is amazing there, and your corps pay no income tax at all. So if I do consulting work for someone, be it virtually or whatever, let's say it's some coaching or sold some courses or some shit, or even did a deal and structured it through courses, that would be an interesting thing. I could do JVs with people and get paid a fee, in which case it would be completely tax-free, and they get to deduct it because I'll invoice them for my Bahamas corp. So there's some really cool stuff you can do. I got to talk to an accountant to get, you know, the lowdown on that, but my understanding is that using offshore banking like the Bahamas, there's no corporate tax, no income tax, no crypto tax, there's no passive income tax, no capital gains tax, nothing, zero, zip. That's amazing. There's a fee to keep your corp alive. It's like $1,000 a year or some shit, like a licensing fee. Who cares? You know what? Even if it's a few $1,000s a year, doesn't matter. But yeah, I would say there's some definite opportunities there. I will continue to rock things, but from a tax efficient standpoint. I guess the second part of your question is, or I guess sort of how I would answer part of your question. You talked about the TFSA and the RSP. I think what you're getting at is when you leave Canada, do you keep those accounts? The answer is yes, I could keep those accounts open. I could no longer contribute to them. So the TFSA would say it's invested in Bitcoin, and I leave it there. It can continue to grow, is my understanding, but I can't add anything to it. So it's there for me for retirement, my RRSP. I guess I could cash the RRSP out any time. So on my last tax year, if I have a low income, I could cash those RRSPs out and pay a very low tax because my last year here, I'll probably not have much income in Canada. And so I could tax efficiently take out from the RRSPs when I contributed to them in my high income earning years, which is the design of the RRSP. A lot of people think the Registered Retirement Savings Plan, or RRSP, in Canada, they think it's age dependent. It's not. You can draw from the RRSP at 29. I'm 29, I could do it right now. You could contribute to it when you're 21 at a high tax rate and take it out at 29 if you had a low tax year. If you had a bum year, you got fired from your job and you were off for a year, you could draw from your RRSP. Tax-free, the first 12 grand's tax-free. Yeah. Next question. How do the LTB rules apply if you're rent hacking? So my understanding is, I'm not an expert on this, but my understanding is when you have possession of the unit as a tenant and you allow a guest to come in, the landlord and you have a relationship, and the landlord cannot evict you very easily. They even have a hard time evicting the guests, to be honest. You are living in the unit. So if there was a guest that had some issues, you could kick them out real quick because you're not the landlord. You're the tenant. So you actually have quite a bit of rights in rent hacking. The tenant has quite a bit of power, more power than a landlord. In fact, rent hacking, you probably just boot someone to the road because they're just a roommate. You don't even own the house. You're a tenant. You show them the lease. I'm the tenant. I pay the landlord in full every month. This person pays me. Out they go. They have very little protection. It's amazing. So I would say much better to do the rent hacking, much safer to do it as a tenant, controlling that asset effectively and getting all that upside cash flow with none of the liability issues because the landlord takes the liability. But yeah, I mean, do your own research. Danny says, hey, Mike, would your kids be following you to the Bahamas and Florida? And is it a tough factor in their future when considering the move from Canada? Danny, good question. My wife's totally on board. My kids loved it. We had an amazing experience in the Bahamas. My kids will likely be in a version of online and homeschooling with an enriched sports and extracurricular activity type program. So I believe the Canadian school system's pretty shit, to be honest. And some of the school systems elsewhere are not great either. There are good international schools in the Bahamas that you pay good money for that are top notch. It's an option. For me and my kids, when my daughter gets past like the age of 11 or 12, unless she wants that social interaction, she can't get it elsewhere, it's up to my kids, I guess. But I wish for them to take an entrepreneurial path. And I'm hoping that I can teach them entrepreneurship and valuable life skills. When you get past like age 10 or 11, you stop learning anything that's useful in the real fucking world. Like, sorry to swear, but it's true. Like, I've had to do taxes, which I never learned in school. But I've never had to calculate like Pythagorean theorem or like I took vectors and calculus. It was a requirement for business. Why the hell was it was calculus and vectors and a number of other shitty courses I took that were not at all valuable required? As in I couldn't go to university for business without it. Stupid. I couldn't take economics without taking vectors and calculus. I've never used that ever in my life. Got a 90% in that course and I retained none of it. Like I probably would struggle through my grade 12 calc textbook today. Did well at the time, but never used it, never retained it. So many courses like that, just bullshit. Like, I can think of a bunch of other courses like the careers class, civics and careers, just useless. Careers? Are you kidding me? I can give my daughter a better version of that in like 1/10 the time. So many shitty programs that you're required to take that we could just do such a better job. So I don't know. I'm pro an enriched homeschooling environment where she begins to work in business and learn that, useful skills. I would say school produces good factory workers, good office workers, and not even really good. To be honest, it doesn't even do a good job at that anymore. Like a lot of the courses you take they're trying to appeal to all the different kids. And there might be some kids who go into the STEM field. And like good for them. It's a shitty paying field, but if you love that, if you love science and math, cool. I regretted taking every science course in high school was useless to me. Like my grade 10 biology class where I had to like build a mobile thing showing how an apple gets freaking digested through the body. How useless is that? That like most of your carbs are digested in your mouth. Like that's a random fact you can find on Google. Cool. Like we could do some trivia nights with my kids and they'd be, more informed and it'd be more useful unless they want to go into science, in which case do a hyper-focused science program. I think there's the elementary school days, yes, like the core reading and writing and basic math. Like you need to be able to function. Back of the envelope, I should be able to run the cash flow in a deal. If I'm looking at a deal, I should be able to figure out the cap rate in my head. That's a basic, by grade 8, you should have that mastered. The sad thing is, in this current education system, more than half of kids can't do multiplication in their head. They can't even do like 12 times 12 is 144. They can't even do 100 times 100. Nothing. Like there's just, the math is shit. And that's, kids with solid B averages. I see some of these kids in high school and they can't even count change back. They're working at McDonald's at 17. It's like, you've been through the Canadian education system. You can't, I give you $20.20 and the bill's like 16.20 and they're like, oh, why'd you give me 2 dimes? I'm like, so you can give me $4 back. Like, come on. This is simple math. There's a failure in the current education system. So I don't want to harp on that too much, but like, it's a weakness. And I hope my kids don't end up like the majority of kids going through the current education system. It's really sad. It's really sad. So I'm hoping I can lean in through that, or I'll probably just hire, like I was looking for nannies full time, and some of the nannies I was looking at were actually teachers. They had a bachelor's of education. We're working as substitute teachers, trying to get jobs in the current Canadian education system. You know, I could offer one of those teachers, hey, you're gonna make 44 grand at your job as a teacher. I'll give you 50 grand a year, and I'll let you travel the world with me. You want to come? I'll hire the best teachers and build my own program that's better. I mean, that's cheap, really. The tax savings alone would pay for that plus, like, anyway, I'm in a different position than most people, I guess. But as you start earning more, like doctors, lawyers, anyone who's a professional watching this, who's had some form of success in their career, should consider leaving Canada, to be honest. I love Canada. Maybe spend the 5 months a year here in the summer or something, because it's a beautiful place. But yeah. So Andrew says, how do I find a mentor to walk me through a few deals, and how much should I expect to pay them? So if you're looking for a mentor or a coach, I would say find someone who's an operator, someone who's done it and is doing it. That's important. Don't go to someone who just teaches. Don't go to someone who hasn't, has done like 5 deals. Probably not the best coach. Yeah. So that'd be one way. Go on Instagram, go to your local meetup groups. There's always someone in real estate who's just retired, who has 5-10 properties, who's like trying to start coaching. Most of the guys who have major success don't coach. I just don't coach anymore because it's not worth my time. Like I made $1,000 an hour doing something else. Why would I coach for $100 an hour or whatever? Some people are $50 an hour, some are 200. It could be extremely valuable to join some of these programs if you need that kick in the pants. I've never done a paid coaching program that I can think of. I've done a lot of free mentorship programs where I've given value and gotten in return. And I have regular conversations with a few entrepreneurs that, we each kind of keep each other accountable and stuff. And so in some way, I have created that sort of mentorship program, but it's not an official one that I pay for. But I think there's value in it for sure. I definitely think there's value in it. And it'll get you from point A to point B a lot faster than if you had to do it yourself and fail through the motions. So yeah, lean on the experience and the leverage of those who are successful. Ian says, what about without frugality? It's really hard to convince the spouse to be frugal. I mean, you've got to get the spouse, you could do it without frugality, sure. You need to be earning a lot more money a lot faster. Or you have to create a real estate business or some sort of business. I think real estate business is the easiest one to create, and it has a really low probability of losing all your money. Like in most businesses, you can go belly up real quick and lose everything. With real estate, it's like you mess up real bad and like you're at break even and you've got this asset that's you're paying the mortgage down and it's cash flow positive. Like it's a safer way to get into a business, and each property is like a business in and of itself, and you can scale it pretty easily, and it's easy to finance, whereas most businesses are hard to finance in the beginning unless you have a good background and track record and capital. But real estate's pretty easy to get into. So I like real estate businesses, and you could take 100 grand and turn it into $1 million over 5 years. Pretty easy, especially in the market that we've had. Like 100 grand should turn into like 2 million in the market we've had in the last 5 years. But that's why I think frugality is so important, because people think, oh, why would I do frugality? I save 15 grand a year off my budget for 5 years or whatever. That's nothing, Mike. Like whatever, that's 75 grand or 80 grand. Yeah, but that 80 grand could become $1 million if you were to do the BRRRR deals, every 6 months to a year, and you're able to double that capital again and again and again, which is what I've been able to do, and lots of people like me have been able to do. So frugality is important. But yeah, if you have good people skills and you can raise capital, you could bring partners on as debt partners, like raising the capital and just raising it as debt, or you could bring them on as equity partners and sharing the profit and scale really quick without the frugality piece. You don't need frugality to do it. I know lots of people who are making 7 figures a year and building real wealth because they're only spending, maybe even 6 figures, low 6 figures a year, which is not frugal at all. They live a lavish lifestyle, relative. but to their income, relative to their income, because they're such high earners and they're growing their portfolio so fast that they are actually frugal in the sense that like they're spending a lot less than they're earning. So if you want to live like them, you got to learn to earn like them. So you got to learn how to take deals down and assign them to people, or take them down yourself and raise capital. You've got to build those high income skills. They're both two paths. Every person's different. If everyone could make $1 million a year, everyone would make $1 million a year. Anyone can, most people won't. My first $1 million year, I remember it wasn't me. Innately, I'm the frugal guy, but it just so happened that I built a snowball so big that I now had the capital that it was much easier for me to get the 7-figure year. I'm very conservative, so it's hard for me to want to go out there and like, I'm not a salesy guy that goes out there and pushes, but I know people who are, and if that's you, like, cool. Nothing wrong with that. By the way, we have 44 people in this stream and 4 likes right now on this live stream. Like, go hit that like button for me. Do me a favor. Hit the like button. I'll wait. That's fine. I don't mind. I'll wait. Just tap it. Before I do the next question. There we go. That was 10 likes right there. Thank you. Let's keep it going. Keep it going. Next one is, currently everything I don't spend goes into the stock market. There we go. 17 more likes. Thank you. 18. Don't want to spend the time to save for down payment for a house. Are there any other investments you'd recommend other than stocks? So private lending is an option, potentially doing some mortgage lending. You can get some 12 to 15% returns. I'm really bullish on crypto right now. So crypto, I think Bitcoin, Ethereum. Honestly, I would spread it out in like your top 20 projects. There's everything from like Helium to like Chain to Solana. There's a whole bunch of great projects. I would spread it all around and then have Bitcoin be my largest, but then spread all the rest of it around into like 20 good projects. Spend like, I don't know, 4 hours. Like spend like a small morning or an afternoon on Twitter, on Instagram, on Facebook, on Google. Just type in like crypto, top 20 growth cryptos, top 20 crypto projects, and just find a good project that's doing something that fucking changes the world in some way. It is going to revolutionize things in the Web 3.0 space. Put a little bit in like the ape coins. Ape coins about to drop, right? It's part of the Bored Ape Yacht shit. Maybe put a little bit in that, but like I'm talking like 1% of it. Like spread it around a whole bunch of projects, and some of those projects, like the ape coin, might 100x for a time, and one of them might drop 50%. But the one that 100x's is going to cover all the rest and then some. So spread it around. I think crypto is a great place to put your money. Web 3.0 is the future. 90% of the projects and the NFT space. I've had horrible luck in the NFT space, by the way. I've invested in several NFT projects and lost my shirt, gone. So what I do know is that it's important to spread it out. Don't put all your eggs in one basket. 90% of the projects aren't going to be here in 10 years. But the 10% that are, and by the way, within the next 10 years, some of them will moon, in which case you just get out. Like if your crypto does 50 times, get out. Take even half of it off the table. Now you've got all your principal back and a whole bunch of profit, and let some of the profit ride. Maybe to go higher, whatever. I like crypto because you can lend it out. You can stake it. So you can take your crypto position, you put 100 grand in crypto, whatever, Bitcoin, a bunch of other different tokens, and you can lend those tokens for liquidity at a 10, 12% interest. So it's better than holding fiat because you're holding, a crypto that's potentially inflation hedging, whereas your dollars you're holding are depreciating in value. And you can lend it to the different exchanges or to different projects through smart contracts. So it's like holding gold, but imagine your gold could pay you every month. You could lend your gold out while still holding your gold. So if it appreciates, you get the appreciation on the gold. That's something gold can't do. Bitcoin is a better gold. No one's going to convince me otherwise. Watch my videos from 5 years ago on this YouTube channel, 3 years ago, 2017 when it was at 22,000 a Bitcoin. And I'm like, this shit's going to crash to 3,000. I was bearish. I was wrong. The network is too big now. There is too much user adoption, and the pandemic in 2020 and a number of other factors as we went through this showed the urgency and the need for use cases that I didn't initially consider. Crypto is necessary. And for wealthy individuals and as the governments continue to tighten around the Great Reset and I don't want to get into some of the tinfoil hat shit, but like freedom. Crypto allows for freedom. The government can't freeze your bank account because you donated to the Freedom Convoy $50. I mean, that shit is actually happening. That's wild to me. There's just anyway. Crypto is a better cash. As soon as Web 3.0 smart contracts started to get more sophisticated, and I did more research on what they can do, I'm like, okay, now it's not just Fugazi. Now there's real value behind some of these projects. Some of them are garbage. Like there's a whole ton of these shit coins, I guess you call them, that are just terrible. And 90% of them are rug pulls and just pump and dumps. And be careful. Be careful. Don't bet the farm on one project ever. You'll have that best friend who's like, dude, go into this one project. Like it's to the moon, man. Like I know all about it. And they might be in the crypto space for 5 or 10 years, but like, don't go all in on that one project. Spread it around. Pick a bunch of viable projects. Go into the Discord on some of these NFT projects and see if it's got a good team behind it. There are blue chip NFTs you can invest in. Like the CryptoPunks and the Bored Ape Yachts, and there's a bunch of other ones, World of Women, that are, some of them will be around in a few years. There's a bunch of other ones too that you can get involved in, and a lot of them won't be here, but you could spread your wealth around. I think anyway, I wouldn't bet the farm on this, but if you had some excess capital and you were interested in real estate, it's something you could look into. I think if you had like $10,000 right now, the stock market's, you could invest in the S&P 500 right now. Or to be honest, I'd pick like most of the stocks that are blue chip from the NASDAQ. I'm talking Facebook, Amazon, Nvidia, Alibaba. Alibaba just popped 34% today, but there's a bunch of names. Like I had a list of 40 names on my computer right now that are down more than 50% in the last 6 months. Facebook down 48% in the last year. Like it's trading at like a 13 PE ratio, and it's a growth stock. It's a tech growth stock trading like a value stock. That they have so much cash flow coming in. Like they could easily become mammoths in the space. I think there's a lot of value there, even with Google and Amazon and some of the big dogs in the space have been beaten up recently. PayPal as an example too. A lot of great stocks you could buy, a collection of the NASDAQ, even putting $20, $50, $100 in some of these companies and just not even looking at it. Come look at it in 5 years. You will thank me. There's so much value. So much is on sale right now. Am I bullish on crypto? Like I'd put, half of what I have in crypto? No, like a small percentage. Spread it around. I'm not all in stocks. Although you see I have a large portfolio in stocks, I'm not in all in stocks. I love real estate too. I'm able to get extraordinary returns in real estate, better than I can do in the stock market. It requires my energy and my effort, and my skill set. But I can make a 100% return in real estate almost every year. But it requires my energy, my effort. That's by far, if you talk to Mike Rosehart, that's the place I should be investing all my money. But I believe in diversity. So I don't have 100% of my wealth in real estate. I've spread it around. I have a quarter here, a quarter in this bucket, a quarter in this bucket, 10% in this bucket. That's smart, especially as you build a bigger portfolio of wealth. Wealth preservation is the most important thing. So I highly recommend and advocate that you should, apply a diversified, balanced approach to investing. So Cloaked Cedric has a good point. It says, don't search for crypto projects online to invest in. There are too many scams and frauds, literally hundreds of obvious scam videos on YouTube that never get taken down. True, especially in the small cap space. Like stay away from the smaller cap shit. I'm talking, pick like the top 100 projects and then dive deep on maybe the top 100 or talk to some friends. Go follow some of the experts in the space. There are guys who have millions of followers who are quality producers of crypto content on Instagram, and they won't pump a shit coin because their brand is more valuable than the pump offering. So even if they were offered like $1 million to pump some shit NFT project or coin, they wouldn't do it because their brand is more valuable. So there's lots of good places you could, even Gary Vee is someone who you could follow just to like start in the NFT and crypto space. You pick the top 10 projects. Like I mentioned earlier, a bunch of names before, some crypto names you could follow. So check those out. I like Bitcoin. I like ETH. I like Solana. I like a whole bunch of these projects, even Helium and Helium mining and stuff like that. And there's a bunch of other projects like that are solid. There are also a bunch of shitcoin projects. If it's paying you, if you're doing node farming or yield farming and it's paying you over 100% annualized return, it's a shit coin. It's a shit project. It's going to zero. There's a reason they're offering that high of an APY. It's because it's shit. So the people who are making big money in that space, typically what they're doing is they're getting in early and they're helping to promote it and pump it, and then they're cashing themselves out and getting out before it crashes. You don't want to be in those projects, especially if you're late. Early on, I mean, if you're a founder and you trust the group and they have a good marketing strategy, you could be part of this pump and dump and make some money. I know people who are doing that strategy, and their skill set is identifying the right people who have great Discord managers and great teams behind them, and they're good at pumping these shit coins way up that pay some of them 1,000,000% APY. Like literally, if you hold this coin for like a day and you cash out, if the coin hasn't like destabilized, you've made your money back. And a lot of these projects last like 6 months or a year. So people are pumping and they just pull their money out and they leave their profit in and they let it pump and they're making crazy money. It's beyond me. I've just been watching on the sidelines. I've watched some people become millionaires doing this. People I know who has like 100 grand became millionaires doing this like pump and dump, no yield farming shitcoin strategy. I mean, teach their own. I've nothing but respect for the hustle. It's a shame though for whoever's left holding the bag on those coins, because being a bag holder sucks. You get to hold it and it goes to shit, right? And as they're cashing out. So you gotta be early in those projects. Thomas says, Mike, thanks for sharing your time. I'm wondering if you ever use your financial skills to hack certain necessities. You missed earlier in the stream. Watch the replay. I literally talked about how I drove a car for free. I lived in housing for free. I was able to get groceries for really cheap. I used to use credit card churning, where the sign-up bonuses and points, and I put my renovations on the cards, would allow me to travel for free. We went to Brazil on our honeymoon for free. It was during the 2014 FIFA. It was beautiful. Did the whole trip for free. Lots of trips like that for free. Went to Florida for free. Lots of trips and stuff. You can enjoy life and get all your costs down. It's really important in the beginning of your journey. Like if you're going to commit to retiring in say 10 years, the first 2 years of your journey, frugality is super important. You can take your foot off the frugal gas, so to speak, metaphorically, as you progress and build wealth, because your income's going to grow. Like now I can take my foot off the gas with the frugality. I can't because it's just who I am, but like it's part of my fabric and my DNA. I can't not be value conscious. But even if I was, yeah, there's no way. I can't not be frugal. It's just who I am. I am trying to spend more. I'm actively trying not to focus on being frugal. I'm focusing on my time efficiency. I'm trying purposefully not to be frugal. But I can't help it. Like, oh, if I can save like 50% on a hotel, I'm gonna spend like half hour doing that. That's a terrible use. I'll spend like an hour researching different hotels in Florida. I was like planning on our vacation. I spent a whole day just booking hotels and shit, looking for deals. That day of my time is probably worth $20,000. And my whole trip was under 10 grand for 3 months. Maybe it was over 10 grand, but not by much. It could have been double that, but my per hour still wasn't that great. A couple $100 an hour. Maybe for you watching this, you're like, hey, $250 an hour is good money. I know for me 5 years ago, $250 a day was good money. $250. Yeah, when I first started this journey 11 years ago, my first property, in 2010, $250 a day was good money. I would have done anything for $250 a day. Like not anything illegal or like, sexual or something, but like normal manual labor I would do for $250 a day. Now I won't even work for $250 an hour. So it's just a different mindset shift, right? I have to be focused on my time. This stream costs me $1,000 a week of my time, and I make zero. I have no monetization turned on. I get nothing from this. I do this just because I made a commitment to myself. I made a commitment to myself I was going to do it for more than 5 years. I've done it every single week. On Christmas, when the Wednesday falls on New Year's Day, I'm here. Doesn't matter what happens. Every Wednesday, 7 to 8 p.m., I'm here. It also says some things about me, right? It says that I'm dedicated to what I say I will do. My word means everything to me, and I do as much as I possibly can to honor it. That's why I'm here. It's not always about the money. I'm here because I honor my word. And I kind of enjoy, to be honest, like I get a kick out of seeing you guys prosper, and I get to connect with a lot of you guys offline too, you know, on Instagram or wherever. And I bump into people on my vacation. We were at the Gaylord Hotel, beautiful water park and whatnot. And I connected with a follower. And it's great when I get to connect with someone. And most of my followers are successful in real estate. And so I get to connect with cool people who are doing cool shit. That's awesome. It's amazing when I get to connect with someone as well who's like, hey, you're Mike Rosehart, man. Like, how you doing? That's an awesome feeling when I'm walking in public and someone recognizes me from YouTube. By the way, we're over 30,000 subscribers as of last week. I forgot to mention that. We hit over 30,000 subscribers on YouTube, which is super cool. So share that around. Let's help it keep growing. I'm not monetizing the channel. I make no videos right now, so I need to work on that. That's been on my bucket list for some time now. So is writing a book. So is building a course. The book especially. I've been really wanting to write a book. Yeah, I would just donate all the profit. I have no interest in making money from it. I'd probably just donate it all to some good causes. But it'd be so cool if people would pay for something that I wrote. That just, like that's the ultimate sign of flattery. I also regret wasting time in university and college. Sorry to see that comment. Sorry about that. Let's see. Tax laws here are insane in the US, Isaac says. You have to file regardless of where you live, or I'm sure you know about the foreign earned income exclusion. Yeah, so unfortunately you can't get your tax obligations, I guess, so to speak. If I leave Canada, I don't have tax time anymore. By the way, tax time's starting in like now. They're due soon. That's shitty. Tax time sucks. Every year I'm glued to my desk, like talking to the bookkeeper, talking to assistant, trying to gather all the documents. I'm like the quarterback trying to get this like massive return filed. And then all my corporations, same thing. It's brutal. It's like I would pay 100 grand a year to not file tax. And then I still have to pay tax on top of that. That's another huge savings of moving to the Bahamas. There are no tax returns. You personally never file a return. There's nothing. Like there is no tax time. That's amazing. It's the worst. So I'm really looking forward to being a tax resident in the Bahamas. I have to live there at least 90 days a year. So that's a requirement, they say. And I have a house there, but it seems like pretty good trade-off. Let's say there is 300K in equity in a primary residence, pulling up to invest. How do you find a property that can be bought for the money that will return enough to pay the mortgage? So pretty much anything that you buy levered up with 300 grand in most cities, not major metropolitans, but smaller cities, should return you enough to cover the mortgage payment. At least the interest only, for sure, and then put money in your pocket. To cover the mortgage and interest, like the mortgage principal pay down, that'll be profit. Just run your numbers. Most of the properties I was looking at when I was doing it, more than covered. So run your numbers. You'll know if you borrow, $1 million out at 2%, that's $20,000 a year in interest. So your $1 million has to make you more than $20,000 a year to cover the interest payments on it. That's the cost you're accruing. In most cases, you could just literally like lend that out in a first mortgage to a flipper at like 15% interest. And so you can make like $150,000 a year on that $1 million, and then take 20,000 of it and give it to the mortgage, and you have 130,000 profit. That's your $1 million just got reworked. I find that when I buy property, it's a value add opportunity. Typically, I'm looking for a 40 to 50% ROI, in which case that $1 million would become $400,000 in income, and the $20,000 in interest per year cost, I just made 20 years of interest payments in a year on that capital. So I think redeploying that is so smart, but that's because I'm a good investor. A bad investor could take the $1 million, put it in the stock market and lose everything, right? So you gotta be careful too. Leverage can be a double-edged sword. You have to be careful that you buy quality assets that have very low downside risk and have good cash flow to service the debt for you, because you don't want to go in your own pocket servicing the debt. So it needs to be self-servicing. It's very easy to research crypto on your own. For sure it is, Cloakcentric. You could easily go follow a few of the experts in the space with great followings, credible people, and then do some research of your own. For sure you could. There are white papers on like most of the good projects. If you stay in the top 25, let's say, pick the top 25 crypto projects. All of them are huge in the top 20 to 25. We're talking like $1 billion market caps. So if you spread it out, like don't put, if you have $10,000, don't put $10,000 in one project. put 500 in one, 500 in another, 500 in another, 500 in another, 500 in Bitcoin, 500 in Ethereum, 500 in Solana, Chainlink, 500 in ADA, 500 in Helium, 500 in whatever. Like there's just so many projects that are solid in the top 20 list alone that you can spread it around. So yeah, I think if you're going to build a little crypto portfolio with a percentage of your wealth, there are so many decent projects. Don't pick the new shit that's just launched unless you've done a lot of research. Talk to people who are in the space too. Like go make 5 friends that are all about crypto, who have been in the space for a while too. It doesn't hurt to talk to those people. Don't just follow friends' recommendations. A lot of them have biases and they want to pump and dump shit. So be careful out there. Buy the blue chip crypto shit and stake it, lend it out. Like you can set up a node staking on Ethereum. ETH is going to be around for a long time. I feel fine about ETH. You can lend ETH out at 20% annualized. So you can, if you have enough for a node, it's like, geez, I can't remember anymore. 30 Ethereum, 33 Ethereum, or I don't know. It's under 50 Ethereum. I can't remember for a node, and we're talking like 70 grand or something. I think it is USD for a node, and that'll pay you a 20% annualized return. So, and you get to hold it. So you've got right there. That can be a great way to grow it, even if Ethereum stays flat on price. I think Ethereum's poised to do double the current price it is in the next 3 years. At some point, there'll be low points where it'll be worse than it is now. But if you're lending, like you've provided proof of stake, node transaction value, you're getting paid for that in Ethereum, then the dips don't hurt. There it is, 32. Thank you. There you go. So 32 ETH. 2.0 isn't here yet, but it's coming. So right now you could just do mining if you wanted to. You could buy a bunch of graphics cards, build a couple mining rigs for like 10 grand. A mining rig for 10 grand, if you did all right on the components, could produce like $30 a day in Ethereum. So for the next year, let's call it, until 2.0 comes around and starts staking, you can make like 80% annualized on mining stuff right now. Bitcoin mining pays 60% annualized. So mining is another great way to get into the crypto space. But yeah, thank you for 32 ETH. It is 32 ETH, you're right. Now that you say it, I'm like, yes, it's definitely 32. Hoping to hold the current real estate and spread the wealth. There you go. So that's an option. You can refinance the capital out and redeploy it tax-free. I'm planning to leave Canada, so for me, I'm paying tax when I leave Canada either way, so I don't mind selling the properties off. Capital gains tax rates are low right now. They are going to get higher. And so I figure it's better to sell now than later. In college, looking to move to the Bahamas after I graduate to grow my career. I'm probably going to start as a tech consultant, but want to network to be a VC one day. Would you something north? So yeah, I mean, there are some definitely decent places. More in the west, I would say, would be safer, but I like Freeport because there's no property taxes and it's hurt right now. There's real opportunity there, so my personal preference, and it's closer. And has an international airport, so it's quick to fly. So for a number of reasons, I chose Freeport as my place. But all the islands are pretty close. You can boat between them, fly between them, whatever. Yeah. I think I got most of the questions here. If I missed a question, I'm sorry. So EBRAC. The 12 grand would be if you had no other income. So each person gets up to $12,000 completely tax-free. The next bracket after the 12,000 is like another, I don't remember, another 15,000 or something that you can take at like a 10 to 20% overall tax rate with the federal and provincial together. It depends what province you live in too. But yeah, if you had a year where you're making nothing, you can withdraw from your RSP whenever you want. I mean, you could withdraw 50 grand in 1 year from your RRSP and it'd be taxed like you made $50,000 in income, which is like a 25% average tax rate. It's nothing. If you put the money into the RRSP at, you're making 100 grand a year at the time, then you'd be saving 25% tax rate. You were paying 50%, you sheltered that income into your RRSP, so you got a credit back at your 50% tax rate. And now you're 29, let's say, and you have a year off, a bum year, you're going to school or some shit. And by the way, you can write off all your education of your MBA or whatever you're taking against that income too. So you get a write off for your tax credits from your schooling. Probably took 60, 70 grand out of your RRSP, almost tax free, using those education credits, et cetera, so forth. There's lots of things you can do to mitigate tax. So yeah, you can. The RSP is just a shelter you can draw from anytime you want. It's not age dependent. It's simply income dependent. So yeah, you can even take it out in your top years, but you just pay tax on it at the top brackets. So that doesn't really make a lot of sense. I think I got most of the questions here. Yeah, I don't think I missed any. If I did, just put it in the comments. I'll try to answer it in the comments after I check the videos once in a while to make sure that I have comments turned off because I used to get so many comments that would keep me up. But I do check the videos occasionally for comments. I think I missed most of them here. So how would I get to FIRE again if I started from day one? The answer is very similarly to how I did, using real estate. Building a business is important. I think leverage is the number one piece. So whatever you can do to leverage, and real estate is a great way to lever. So you can put 20% down, the bank puts 80% down. Every dollar buys you $5 in real estate. So if you can build a $1 million business in real estate, that's $5 million in real estate holdings. And if it appreciates 20%, your $1 million in equity just doubled in value because your $5 million portfolio is now worth $6 million, and you still owe the bank only $4 million, and your $1 million investment has now become $2 million in equity. So you just doubled your money. That's 20% growth is achievable just buying value add properties and renovating them. So yeah, I think that real estate's the best way to do that. Frugality, of course I'd be frugal, more frugal than I am now, a lot more frugal. If I had to start again, I'd tighten the belt. There'd be a lot less spending and luxury than there is now. You look fresh and healthy. Thank you. Appreciate that. How many hours sleep? Well, as you can see from the bags under my eyes, I'm exhausted. Last night I did not get a good night's sleep. My body functions best if I have like a nice 9 hours of dedicated sleep. The next day I only need like 7.5. So I'll do like an 8 to 9 hours sleep, and then like a 6 to 7 hours sleep, and then an 8 to 9 hours sleep. I try to go for 8 hours. That's my goal. But usually that's like the minute I put my phone down to like when I wake up in the morning. So there's obviously a time to fall asleep and stuff. So I don't know. I don't do the best. I eat fairly well, fairly healthily. I'm in good shape. I'm not working on it all right now, but I go for walks and shit. So like I'm fit, but I'm not going to the gym pumping right now, unfortunately. So I'm not in the best physical shape that I could be. But yeah, thank you for that. I'll take it. What are your thoughts on the digital currency, CBDC, how things will be valued in the future? We had resets in the US 1944, 1971, probably by next year, 2023. So Omega, I mean, it's possible. Looks like they're pushing towards a digital currency. They want to become a cashless society. I absolutely hate a cashless society for a number of reasons I've shared on my Instagram. It's a horrible authoritarian, it sort of ushers in an authoritarian regime type of lifestyle. The last one, 1971, was when we switched from the US dollar and the fiat dollars being backed by real gold, and we switched to the petrodollar, basically backed by nothing. The US dollar is backed by nothing right now. So they'll probably switch to digital currency. It would make sense. And then they would get rid of cash, and you would have no way to do anything. You couldn't sell something on Facebook on the side or Kijiji or Craigslist. You couldn't, pay a contractor for a deal on the side. That would stop them from making any money on the side. So then the government, if they wanted to, could freeze your bank account, and you have no way to feed your family. If they decide you're not jabbed with the latest thing that they created, the latest vaccine they've got for you or something, then, which hypothetically they could do, they could partner with Big Pharma, who mostly lobbies the government and typically gets exactly what they want. They could lobby and then, force some new fucking vaccine and say, hey, we have no cash, we're a cashless society. And it's some dystopian fucking horrible reality that could happen. That's why I'm thankful for crypto. The government proved during the Freedom Convoy and what's been going on with Russia and Ukraine that they can't freeze wallets. They reached out to some of the exchanges and were like, freeze them. And it's like, it's on a cold wallet. There's nothing we can fucking do. Or other companies are like, hey, we didn't collect. There's no KYC. We didn't collect any information on the client. We have their email. There's nothing we can do to freeze this person. And the government has the power to do that unilaterally. So I think I've always been a fan of having some gold, having some silver, having some cash, and now crypto. It's easier to transport, and instead of it sitting in a safe or in a safety deposit box, I can now invest it. So I am 100% pro crypto where I wasn't before, where there wasn't a good intrinsic value like there is now. Holy, it's been 71 minutes. I should go put my kids to bed. You know, a great way to prepare for the Great Reset. It's also, I've been screaming from the mountaintops, leverage, good debt against good assets. So cheap debt against good assets. It's the best way. It's the best inflation hedge you can ever have. Because when inflation's at 10% and you're paying the bank 2%, guess what? You're paying the bank nothing in 10 years if that happens for a number of years continued. I borrowed a ton of money. I had millions in debt. And I'm so thankful inflation's run rampant. Not for the people who are suffering right now, but for the fact that the bank's fucked. If they lend you 100 grand and in 10 years you pay them back 100 grand plus $10,000 in interest, and that 100 grand has the buying power of 40 grand, you just effectively paid them back 40 grand on 100 that you borrowed. So borrow, with this Great Reset and the printing of the money, borrow as much money as you possibly can. Get as many mortgages, cheap debt. Get cheap debt on quality assets. And you'll be just flying through this Great Reset. And it's not going to be a reset like, I'm not a tinfoil hat kind of guy, but like legitimately the fiat is going to collapse. It was designed to collapse by 2100. Like they were targeting 2.5% inflation a year, devaluing the money every single year with 2.5% compounded. That's the goal. Rents are up 39% year to date in Miami. In London, they're up over 20%. In some markets, 25%. When housing is growing at 25% and gas is at 50% and food's up 40% on the year, guess what happens to the buying power of the fiat dollar? Goes down. Obviously, and it continues to spiral. They have to print more money to help the people who are suffering because everyone's on fixed salaries and whatnot. And it just becomes an endless spiral, which is not going to end in a great place. It's the reason that my portfolio right now is mostly cash. I've closed out most of my tech positions, which sucks on days like today. I had a huge Alibaba position and a number of other great tech plays that I sold off because I'm bearish as hell. Whenever oil spikes 50%, there is a recession that follows. Always. When you have 4 rate hikes in the 12-month period, a recession has a 70% probability of happening again. When you go through major inflation, the worst we've had since the 80s, which I didn't think would ever happen this soon, it is happening right now. Inflation's the highest it's ever been. Again, recession. The market is roaring hot today. You know what I'm doing? Shorting the market. Not actively, but through like gold and other hedges. It may roar and continue to roar as they print Fugazi dollars, but I'm bearish. Long term, still bullish, but short term, bearish. All right. That was a good bite. Some good onions in there. Peppers. How will bank assess old mortgage? Well, they're going to be pegged to the fiat dollar. So they lend to you in fiat. So you can always just pay them back in fiat. So it should be fine. All the contracts are worded that you have to pay them back in fiat. So if the fiat's worthless, it's all good. Yeah, I would take some borrowed dollars and I would invest it into crypto and real estate and other great assets that will hold their value. We just bought tonight near Ottawa, a partner and I just bought a 50-acre farm with a nice new build house on it for $600,000 just near Ottawa, Kingston area. It's like 15 minutes to downtown. And I'm acquiring another property in Florida right now. Let's put an offer on it. I'm buying quality stuff that I believe will do well through this environment. It's about protecting wealth at this point. There will be opportunities. I'm still hella bullish on like Facebook. I would load up like 10% of my entire portfolio on Facebook right now. You can mark my words. You can play us back in a year and see where it's at. Puts at 170. Selling puts to acquire Facebook at $170 cost base. I guarantee you Facebook's up in the next 5 years. way over $170. So I think it's a great play. WhatsApp, Instagram, Facebook. That is Meta. Forget the new Meta stuff they're doing too, which is way early. They're way early on that. But it will come too. You will own nothing and you'll be happy about it. That's the saying. I gotta go. Put my kids to bed. It's been a good 75 minutes. Thank you everyone for tuning in. Thank you for your questions. If I missed your question, put it below. You know where to find me on Instagram, Mike Rosehart. On Facebook, Mike Rosehart. Look for the blue check mark on Facebook. There are some fakes out there, so follow my real account. Yeah, I think that's pretty much it. Spend less, earn more, and maximize returns on the difference. See you guys.